Right, what's up, guys? It is the weekend, so there's no trading to be done. I went through and I just did my back testing to capture the data for this week. Got some really interesting results when I compared it with my live trading. My live trading was significantly better this week than what I've had in previous weeks. I said that my commitment for June was I'm just going to commit to the plan. And for the most part, I did that really well. There's still some certain things I actually need to be working on. And so we're going to talk about those because what I'm doing now is I'm going to break down the back test for the week and my actual trading for the week, compare and contrast the two. Understanding, of course, that the back testing is something of an optimized scenario. It is super easy to go back through and just have amazing backtesting results. But when the candles are actually playing out live in front of you, it can be a little bit more difficult. There's a couple of things that for example, this week we're going to talk about some type 2s that I would have just gotten the perfect entry on. That in some other instances, you actually want to have your type 2 a little bit further down from the top of the zone just because you might not get filled. And so what ends up happening is I set alerts so that I can kind of watch the candles, and that results in me jumping the gun sometimes. So live trading in comparison to back testing, I jumped the gun on I think there's two different occasions, and that ended up costing me a little bit. So, um, without further ado, let's break down the price action for the week. Kind of explain what we did and how this all got traded. You can see these are my actual trade entries. Shout out to TradingView, by the way. They put a dark border around the arrows, and they are significantly easier to see than what they were before. So I like that little tweak. Um, I did, as you can see, we got the breakdown and short there, and this is where I really started committing to my plan because you can see this is the end of last week where I was getting all jumbled around. And or no, sorry, this week was. Oh, that's cool. I click that and nothing happens because Windows 11 sucks. This week started on the 5th, so we're actually in this area. So that's fine. Let's focus in on that. You can see we've been stuck between these two zones for a little while now. Type 1 short, Type 2 short ended up taking profit here and here. This trade actually ended up, and it just now came up. Why? Why is Windows 11 so bad? So that trade ended up working out just fine. We pushed back up. We got one more test of this zone. That short trade ended up working out great. Here's some interesting price action that I actually did not want to take this long position. Everything about this told me that this is a bad idea. I don't want to be in this trade. There's a couple of tricky things going on with long positions in this bottom zone. If you actually grab a true type 1, you put your stop down here because that's where I've determined that the stop should be. We could probably argue about that a little bit and play it a little bit closer. But with this mess right here, I felt more confident having a stop down here, so maybe that's part of the problem, but you can see you're not really getting a very good risk to reward ratio. We're getting a 1.25 risk to reward ratio instead of that nice 2, that 2 to 1 is basically what we're aiming for. If you pull your entry down a little bit, by a lot bit actually, you can get a good risk to reward. And so I did that in the back testing because I was playing with this area, and I basically through the back test said if I get an entry, what I really want to aim for is that 2 to 1. It's really not going to be worth it for me to take a 1.25 to 1 risk to reward ratio. That's not going to make sense in the long run, so I'm going to be a little bit picky about my entries. And obviously it ended up playing out pretty well because you got the entries all down here, and then we finally got the breakdown. On this final trade, you can see that I did trade my plan. I got long type 1 right here, type 2 right here, and we tagged out for a loss right here. I did not want to be long in this instance, and the reason for that, this is a it probably has another technical name, but this is a formation that Don calls a hammer on glass. And the idea is that you have this horizontal level that we just have not breached it. In this case, it's a horizontal level on the bottom, so it's buy side activity coming in strong every single time we touch this level. But every time we push back up, we are making lower highs. So when the buyers come in, we are unable to break into a higher high. So what that is indicating is that the sellers are actually maintaining control. The buyers are coming in right here, but at some point, one of those is about to give out. Either the sellers give up and we shoot really high up, or the buyers give out and we come to the downside. Given the fact that we are in an overall bearish environment, we are definitely coming down more than we're going up. And combine that with the fact that on a hammer-on glass play, it tends to be this horizontal level that breaks more often than the trend line will break. That kind of indicated that if this breaks, we're coming down hard. And as you can see, we sold off our all day. We based out, sold off again, hit the next zone down, and decided that, yeah, I mean, you can see we got a little bit of a wick. So the buyers showed up a little bit, and the sellers are just like, nah, I'm still in control. And that thing came down hard. So took two losses at the end of the week, one going long here, the other going long here. So let's take a look then. Oh, look, I made a fancy title page. Take a look then at the backtested results. Remember, on the backtested results, I'm actually risking a little bit less than what I'm risking on my live trading results. So the numbers are going to be slightly different. But backtested results. Backtested results, the first win of the week was $2,300. The second win was $647. That was only the type 1 long. So that was when we got the type 1, type 2. We came down. We got in down here where we could get a good risk to reward ratio. That was a type 1 long. We never got that type 2 entry. And then we took profit up here and got in short. So type 1 worked out great. Then we had a type 1 short and a type 2 short. As you can see, that trade worked out just fine. Finally, we tried types 1 and 2 long, types 1 and 2 long at the end of the week. That would be here, and those are the two losing trades. So the end results for the back testing period for this week is a profit of $3,620. That's risking up to $500 per entry. That means you take a type 1, you're risking 500 with your stop down here, and then you take a type 2, you're way closer to your stop, but you're still only risking $500 with a stop loss in the same place. And as you can see, when you get a type 1 and type 2 and they work out in your favor, that's where the real strong wins come into this system. So 60% win rate for the week, profit factor of 3.09. That is a great profit factor. A profit factor of 2 would be fantastic because that means that you're making $2 for every $1 that you lose. In other words, you're maintaining that 2-to-1 risk to reward ratio on the larger, broader scheme of things. And at that point, you just need a 50% win rate and you have a profitable trading system. So that's kind of the bench line that I'm aiming for. Obviously, anything better than that is just the icing on the cake. But as far as just maintaining profitability and having a system that actually churns out money, that's what you want to do. So the average return for the week, risking $500 per entry, was $724 in the back tested period. And you can see the little equity curve right there. And I kept those stats in there. I don't know what it means by 43 potential performance, 43%. 43% of what? Because I don't have an account value loaded in here. Maybe it's just going on like the average return is 0.56%, and that's movement in the S&P 500. By the way, that's why futures contracts are so fun. My average trade is only following the S&P 0.56%. It doesn't need a big move to turn into something that's going to be profitable. Or so that's my average return anyways. So I'm wondering if that 43% would be like an annualized version of this. I don't know. I have no idea. So there you go. There's the back-tested results. Comparing them with the actual live trading results. Somewhat disappointing, actually. I'm risking more, so I should be making more, but you can see my accumulative return, net profit and loss, is about $800 lower than the backtesting results. Still a 60% win rate. I wouldn't expect that to fluctuate at all unless I'm really deviating from the plan. My profit factor was only 2.35. Still a very respectable profit factor, especially given that 60% win rate. You maintain that in the long run, you're making plenty of money. But my average return was only $580, and I should be making more with the live trading account because it's a little bit bigger than what I'm backtesting with, and I'm also compounding it, so that number should go up over time, hopefully. Oh no, I just pressed a button. Sorry about that. I pressed a button and it hates me now. Sweet. Um, but yeah, as you can see, average return is a little bit smaller of a percent too. So we had a $2,400 win. That's what a type 1 and a type 2 win should look like. So keep that in mind. That's important. We had a $532 winner here instead of a $647 winner for that type 1 long. What ended up happening was I did not have a limit order set down here where it would have been smart. I ended up getting in early because I was afraid I was going to miss a good entry. And then, of course, it popped back up and it would have, I think on the 15-minute time frame. Where did that take place? Right here. I think I got in early, and then of course it would have come down and hit my entry. So those couple of points will make a big difference in the long run. Especially, I think that would have allowed me to trade 3 contracts. And I don't believe that I traded 3 contracts on that particular example. So yeah, I got a type 1 a little bit earlier than I really should have in that zone, and compare the backtesting to the actual trading results, and I basically missed out on $100 profit. This is the most telling of it, though. So here's $2,098 profit versus $2,351 profit. That's the type 1, type 2 short. In the backtesting, I nailed that type 2 perfectly because I did the same thing over here. So in real life, I had a limit order set for up here. All right, let's zoom in on this 15-minute time frame. I saw this thing push up, start going a little bit sideways, and I decided, I'm like looking at it and I'm like, I don't want to miss this entry. I want to type 2. It was probably like right here. And so I dragged my limit order down and got it filled. And then of course it shot up, would have filled my limit order just fine, and then we continued to sell off. You can see I did buy back 1 contract here. I was afraid that this was going to be a bull flag playing out, and by moving down my limit order, I was actually in a little bit too heavy for a stop loss up here. So either I could tighten up my stop and risk stopping out for no reason, or I could trim off 1 contract and bring myself back within an acceptable amount of risk for my trading system, and that's what I did. So I got rid of 1 contract, and that technically locked in one of those type 1 contracts because it's first in, first out when you're trading futures. So I got in short here, locked in a contract here, and made like $12 on it, and then the whole trade played out just fine. I will say though, that definitely, that morning when we saw this push up, I was looking at the chart and I was like, huh, I'm going to take a loss today. And then it didn't. So lo and behold, trusting the zones did end up being profitable. I mean, at the end of the day, I made $2,000 profit. So like I can't complain a ton, but I missed out on what should have been like another $400. Sorry, an additional $300 profit here, $100 here. So I'm basically missing $400 of profit on the week by trying to get in or out a little bit too early. And then the losses, the loss amounts actually aren't that out of line. I think I probably rounded up on some of my risk. So if I can afford to risk 2.9 contracts, I typically just trade 3 contracts. I'll take on a little bit of additional risk, hopefully make a little bit of additional profit. But that's why you see these loss amounts are actually pretty different than what we had going on here. I'm wondering if my entries are a little bit different too compared to what I got in the back test. But that's why those numbers are a little bit different. So the end result is a lower profit factor and actually a lower accumulative return. So there was one thing that I did this week that I didn't do. It's not in accordance with the trading plan. This is a little bit more subjective. I was trading some options contracts on the side. I was short IWM I bought a put that was 60 days out. I bought a BABA put that was 60 days out, and I bought a SPY put when I saw the hammer on glass formation as a hedge because I knew that my next move was to go long, and I kind of felt like I was going to take a loss on that trading futures. So, trading futures, I decided, yes, I'm going to just stick with the system. I'm going to go long here. I'm buying one SPY put, and I think I got it right in here, somewhere right around here, right before the drop. And I said, I'm buying one SPY put that's got 30 days on it just as a hedge because I really doubt that we see this thing break to the upside. I think we're going to come down before that. So at some point, I'm going to take a loss on this. So what ended up happening actually was I bought that SPY put. We rocketed down toward the end of the day. That happened, 2, 3 o'clock in the afternoon. We based out overnight, made the world's most obvious bear flag. I didn't trade it because I'm not doing trades between zones, but I mean, if you were trading futures right here, that was a super easy entry with a super easy stop. It worked out just fine. Futures trading, I got long in this zone with that options contract. I had a stop loss in place for the contract itself, and I just trailed it. And as you can see, it ended up paying out. I got tagged out like right here. Didn't get back in or anything like that. I got tagged out of my SPY put, my BABA put, and my IWM put. The biggest mistake that I made on those was I should have grabbed those 30 DTE as well, or 30 days to expiration. You can see BABA ended up working out okay. I entered up here. I wish that I would have gotten this, but this was during extended hours. And then IWM, do I have? Oh, that's funky looking. I don't think I have an entry of where I actually got in. I got in like a day or two late. It was like right around here. Whereas I wanted it more or less up here because do I have the right zone drawn out? No. Don has different zones drawn out. There you go. That's what we were looking at, and I thought about getting short right there. I thought about shorting futures contracts with the stop up there, and I didn't. And obviously that would have worked out just fine. So, so the biggest thing that I did with those options was, I was trading 60-day options and getting out of them after only a couple of days. 30-day options work a lot better for a move like that. So the end result of trading with those hedges was a cumulative return of $4,739 on the week. Compare that to the backtesting system, and I actually outperformed it. A 75% win rate, which just is because I was right on all of those, a much higher profit factor, and a better average return. The average return percent is going to be thrown off because on my SPY put, I made over 100% on it. You can see SPY, I made over $1,000 on that put. So I lost a little over $2,000 coming down through those zones, taking those long positions like the system dictates, but I made back 1,000 by grabbing that SPY put, and then made back an additional 448 and 376 on BABA and IWM respectively. So the options hedges worked out really well for the system this week. Obviously, they could have gone against me, and so it's important that I keep in mind like how fickle these options can be and not go super heavy on them. But in this instance, I mean, the hammer on glass to me just felt like the world's most obvious play. I'm going to stick with my system because I know that's going to be profitable in the long run, but I did grab that hedge, and obviously it worked out just fine. So that brings me down to what do I need to improve on next week to make sure that my trading is even better, that I maintain a higher level of profitability. I think there are two things to keep in mind. One is this system is really meant to be just a set and forget style of trading. This last week was my busiest week of the year. That's not an exaggeration. I have a major facility that they have an annual shutdown that I have to do a lot of work for every year, the first full week after Memorial Day. So I'm super busy during the day. I don't really have time to be watching charts or anything like that. And as you can see, I was still able to trade profitably. That feels really good, by the way, because 6 months ago, I don't know if I would have thought futures trading profitably when I'm busy at work would have been a possibility. So I'm stoked on that. Um, but this system's meant to be set and forget. I have limit orders set in place. The only time I really need to stop and look at the charts actually is when one of those limit orders gets tagged. So if I get tagged out or if I take profit, I need to reset an order, and that's about it. other than that, I just let the system play itself. And so by doing a set and forget, I would have had better fills on my type 2s, and that really would have contributed to being more profitable this week, as well as I would have had a better fill in one of my type 1s, type 1 long. The other thing I need to be careful of is about rounding up. I don't think it's going to have as large of an impact because it's not like I'm risking a ton more. Um, but like both of my losses in the actual live trading results are within 2% of my account. Sorry, there we go. They're both within 2% of my account, so I'm not going above and beyond what I should be risking by any means. But it does mean that I picked up a little bit of additional risk. I lost out on some profit here, and so that kind of skewed my results. Once again, though, so I understand I need to work on that. It's something I need to pay attention to, but 60% win rate with a 2.35 profit factor, that's a profitable system. You maintain that in the long run, and yeah, you have a system that wins you plenty. So I can't complain a whole lot. This week was a pretty good week of trading, all things considered, and I know that I'm looking for a break and retest entry, so I would actually love to see this thing push up, perhaps Sunday evening, and let's do type 1, type 2 short and watch this thing come down. It's going to be super annoying if we break above and then start pushing up there, because I am a little bit heavier. You can see the contracts I have in play. I am going to be risking more on break and retests than I am on regular trades, because well, we've looked over this once before, so I'm going to keep this short so that this video is not too long. But let's get rid of that, and let's pull up the backtesting results. Oops. And then for setups, we'll put the break and retest filter on. Oh, and remove the date filter. So for the break and retest entries, oh, there you go. We had an additional break and retest this week. Oh yeah, we did. Nice. So the break and retest filter, we had one trade like that this week. That's an 84% win rate, profit factor of 9.16, average return of over $1,000, risking $500 per entry. So out of my cumulative backtesting results, which are something like $29,000 profit right now, 14,000 of that is break and retest. That's a massive percent of the overall trading system. So break and retest is a very profitable entry, and that's why when I see that opportunity present itself, I'm going to be risking 2% per entry instead of 1% per entry. I'm going to double up on that, turn that into something that really compounds the gains, and then just trade normal size for everything else. So we'll see if we can actually lock in one of those entries. Since I'm going to be doing that, watch, this will be the time that it doesn't work and I'll take a bigger loss. But hey, no big deal. Obviously, we have a system that so far is showing to be profitable. Just to show the total results of the backtested system so far, we've got $29,000 profit. The break and retest in this system, by the way, are still only 1%. So I could go back through this system and rework the break and retest to be worth more. A 61% win rate since the beginning of April, and a profit factor of 2.99. That is, I mean, that's fantastic. I would not mind at all just having a system that runs that for, year in, year out. You're doing just fine on something like that. So there we have it. Those are the results so far, the back-tested results versus my live trading. We will see what next week holds. If you want to follow along, make sure that you click the little subscribe thingy and do all the YouTube stuff. If you want to learn where I'm learning all this stuff, if you want to know how zones work, if you feel like you found me and somehow you don't know who Don Fran is, go to YouTube and search for The Don Fran Show. And he's my trading mentor. I've been in his mentorship group since day zero, and highly, highly, highly recommend him to anybody that actually wants to learn how to draw these colorful boxes that I use to structure things. You want to learn what a hammer on glass is. I mean, all of that is a result of what Don teaches. So there you go. Thanks for watching, and I will see you on Monday.